So I'd love for you to just kind of talk about how Manhattan Ventures, you guys are able to properly do due diligence and underwriting, and even maybe just working with your family offices and helping them navigate the right deals versus deploying capital. Maybe you might get something a good deal, maybe it might be 10%, 10 cents on the dollar, et cetera. However, though, you want to make sure you're not catching a falling knife. So I'd love for you to just talk a little bit about that.
Sure. So I love what you said there, right? Because so much of the concept of diversification and asset allocation strategies across venture and really for us is the opportunity at hand, is that investment at hand, the right deal for the right time in the market, and is right now the right time in the market, right? With that being said, generally where we I think have a really strong position at Manhattan Venture Partners is because we have always, for the last 10 years of our existence, actually, been known as predominantly a secondary principal investor. And what does that mean, right? Christian, as you said it, we typically are investing in companies, by way of predominantly a focus on investing in the secondary stock, which is the stock that's been issued to the investors, to the early employees, to the founders. We're buying that stock from them as our predominant investment focus and thesis. And then what we're doing is investing in the next rounds of funding subsequently if those opportunities are also realistic and are also appropriate for our investment thesis. So we do like to say that our primary business is secondary and our secondary business is primary, and the primary being the new rounds of funding. So with that said, and that being our real core thesis as a fund over the last decade, we believe that just based on the data sets that we have, and I think what's really awesome is we have this really data rich data poll that we do, which combines all of the sources of the bid and ask offers of the secondary market, right? And Christian, there's no like stock exchange, right, for the secondary market. It's something that over my career, after being at Carta and NASDAQ Private Market and Forge Global and building infrastructure for these marketplaces, we've tried to consider what a stock exchange for private company stock would look like. But fundamentally, there's just so many amazing functions that a private company reserves by staying private. And a lot of that means picking who their investors are to join the cap table, allowing their board to have a say in who those investors are, a right of first refusal, which is the company's right to block proposed investments or secondary transactions. All of these things we at MVP really honor with private companies. We understand that's why they're private. They don't want just anyone buying and selling into their stock. So they have policies and procedures to allow them to reserve that right. And we reflect that in our thesis. And with that said, we're looking at all these data points. Like we believe that on any given day, I actually do see somewhat of like a stock ticker that hits our data product internally that we've built. It's not a product we release publicly, but we do bring that insight to our LP base of our funds. And we understand where effectively private markets companies are trading in not a stock exchange, but at least an order book in a sense. So we're pulling in all these data points from other platforms, emails, conversations, and it's really data rich product. So I mention that because we use that when we're defining our thesis about whether or not we invest principally in a company to say, is this entry price the right entry price to achieve the opportunity that we want and the threshold that we want? And then we're going in and we're typically saying we're actually selecting many of the companies up front, and we're actually choosing an entry price that we feel comfortable with as a way to hit our investment hurdle. And so we do that and we share those insights with our LPs. And I would say that is what is fundamentally, I think, a strong position that all of us, right? Family offices, venture funds, if you have a desired entry price in a company based on an investment thesis you've developed, right now is a buyer's market. So you could go to a shareholder base and say, hey, we've developed a thesis, we have capital ready to deploy. Here's the price we're willing to pay. And in today's market, generally, many shareholders are quite receptive to that because there is a liquidity crunch and people are willing to play ball when people have actual capital they're ready to deploy.
Beautiful analysis there.